When it comes to graphics cards, NVIDIA is by far one of the biggest contenders in the world. NVIDIA Corporation operates as a visual computing company worldwide. It operates in two segments, graphics and compute and networking. The graphics segment offers GeForce GPUs for gaming and PCs, the GeForce Now game streaming service and related infrastructure, and solutions for gaming platforms, Quadro/NVIDIA RTX GPUs for enterprise design, grid software for cloud-based visual and virtual computing, and automated platforms for infotainment system. The computing and network segments offers data center platforms and systems for AI, HPC, and accelerated computing, Mellanox networking and interconnect solutions, automotive AI cockpit, autonomous driving development agreements, and autonomous vehicle solutions, and Jetson for robotic and other embedded platforms. The company's products are used in gaming, professional visualization data centers, and automotive markets. NVIDIA Corporation sells its products to original equipment manufacturers, original device manufacturers, system builders, add-in board manufacturers, retailers/distributors, internet and cloud services providers, automotive manufacturers, and tier 1 automotive suppliers, mapping companies, startups, and other ecosystem participants. With a current share price of $303.90, does this company's fundamentals actually match this ticker price? We're going to find out. Hi there, everybody. Welcome to another stock analysis video. We are going to be doing one of my personal favorite companies out there, NVIDIA. By far, one of my favorites when it comes to graphics. I love my NVIDIA GeForce RTX graphics cards, which I actually have right now on this computer, and it's just absolutely amazing. Starting off with this company's dividend summary. This company pays a dividend yield of 0.05%, which is actually really incredible that this is still considered even like a dividend. It's just amazing. This 0.05% ends up being about 4 cents a share, and they only pay out 16 cents every single year. Payout ratio of almost 4%, 5-year growth rate of 6.83%, and they actually cut their dividend recently, which is why their dividend growth is 0 years. Ex-dividend date was August 31st. Payout date was September 23. So unfortunately, you would have to wait to maybe about November 31st to actually get into the next cycle for their dividend. Coming over here now to the calculator, we got NVIDIA, ticker symbol NVDA, share price of $303.90, PE of a whopping 108.59. We would ideally like to buy this at 20 or anything under than 20. At 108, this is already saying that this is very expensive. And the current market cap of NVIDIA is about $759 billion. Now, coming over here to the growth assumption, I'm going to say that a 25% growth assumption is somewhat reasonable for this. According to Seeking Alpha's revenue growth year over year, they have it at 67.6%, which is absolutely massive. Knowing that this company mainly focuses on graphics cards, at the top of my head, I cannot think of any other company that makes graphics cards. I know of others that make CPUs and processors. However, specific graphics cards in regards to having it dedicated for gaming, I can only think about NVIDIA. So I honestly believe that once this chip shortage goes away, 25% growth assumption is going to be nothing compared to what they will be able to make. Now, coming over here to the fundamentals, we got net income 2016 $1.6 billion to 2020 of $4.3 billion. That is an increase of 83%. Now 2019, they actually went down from their prior year of 2018 to $2.8 billion. However, because of what was happening last year with the pandemic, a lot of people actually decided to get into gaming, and that's probably why their revenue went up. Will they be able to sustain this? I don't necessarily know, but I honestly believe that because there is such high demand to get into gaming, especially now with this chip shortage, I honestly believe that this revenue, that this income will continue to increase. Next, we got the free cash flow. 2016, $1.5 billion to 2020 of $4.7 billion. That is an increase of 68% with an average 5-year free cash flow of $3.3 billion. This line actually seems very, very steady, and if they are able to keep this up, which I honestly think they will, they might be able to meet these they actually might be able to meet these projected ones fairly easily. Next, we got the revenue. 2016, $7 billion to $16.7 billion in revenue. That is massive. That is an increase of 58.56%, which is absolutely incredible to see. Now we got the total debt. Obviously, we would like for a company to have less debt than more debt, because the more debt that a company has, if things were to hit the fan, then, well, a company with more debt will probably not be able to survive. So, unfortunately, right here, as you can see, we got NVIDIA with a lot of debt. 2016 of $2.8 billion to 2021 of $12.8 billion. That is an increase of 64% in total debt, which is just incredible to think about. Next, we got the shares outstanding. And again, this is by far one of the most important markers when it comes to analyzing a stock, because this tells you whether the company is diluting you as an investor or are they giving you a bigger piece of the pie. We got 2016 2.3 billion shares to 2021 of 2.5 billion shares. That is an increase of 6.25%. Not that big of an increase, a little bit more than what I usually would like to see. If I see a share increase of anything less than 5%, I say that, well, they may just maybe issued shares because they don't want to get into debt. However, 6.25% is a little bit much for me to see. However, it's not a lot, it is still an increase. And lastly, we got cash and equivalents, and as of 2021, they have $5.6 billion in cash and equivalents with an average cash of almost $4 billion. And with all of those metrics, taking into account a 25% growth assumption and a required rate of return of 8.5%, we get a target share price of $71.29. Adjusting for debt, however, which they have a ton of debt, this goes down to $68.88. With a margin of safety of 5, 10, and 15%, we would ideally like to buy this at $65.44, $61.99, and $58.55. Seeing that this company has a PE of 108, the fact that this thing needs to drop to around 68 to 71 tells me that my assumptions are in the correct ballpark. Now, you guys are probably saying, this needs to drop from 303 to 71 the highest and 68 the lowest. That's just way too much. It'll never happen. And guys, when it comes to ticker prices, companies that are overvalued will eventually come down to what the fundamentals are showing. Okay, either two things need to happen. Either the price needs to come down in order to match the fundamentals, or the fundamentals needs to come up to match the ticker price. Now coming down here to the dividend, let's actually see if they are able to even pay this dividend. Obviously at 16 cents a share, this doesn't seem like a lot, but we still need to see if they are still to afford it. Amounts paid in dividends every single year is almost $400 million, and after paying it, they still have $2.9 billion in cash. This payout ratio in regards to the cash flow is 12.1%. So yeah, they still have a lot of money to pay this dividend. In fact, they could even afford to increase it, and they haven't for some reason, but yeah, they can 100% afford this dividend. So that pretty much does it for this stock analysis video. Liked if you like, comment, subscribe. It really does help here with the algorithm on YouTube. You can follow me on my new tech sites of BitChute, Odyssey, and Rumble if you want to catch these videos, my crypto videos, and only on those sites you will get exclusive videos, right? And if you would like this calculator, make sure to check the video called Discounted Free Cash Flow Calculator, which I just posted a couple days ago. If you would like this calculator, maybe you don't agree with my assumptions. Maybe you would like a higher required rate of return. Maybe you think 25% for NVIDIA is too low. If you think that my assumptions aren't correct, then by all means, see that video for the discounted free cash flow calculator. I explain how to use it, and it's free. You can just make a copy of it. All I ask is that please subscribe, please like, please comment. It really does help. I really would like to grow my channel. All right, so with that said, peace out and be on the lookout for the next stock analysis video.